as a retired U.S. Army major, someone who has 100% of the information, a coach and mentor. We call her the trade whisperer. Ladies and gentlemen, I'd like to bring to you to this call, Ms. Tasha M. Dyer. Ms. Dyer, are you on the call?
Yes, I am. And I just want to thank you so very much for hosting. I want to thank you so very much for what you do for the movement. Be Your Own Bank is definitely a movement. And I just want to thank you so much. Ladies and gentlemen, I'm excited. I know we're just coming off of a holiday weekend. So we really only have 4 days of trading, but what does that mean? That means that we are going to make the most of what we have. And I want to show you and share with you this evening how we can maximize this BYOB cash out strategy. And the reason I have this pulled up right now is because this is where we're going to begin. But in beginning here, we're also talking about beginning of changing the lives of families. We're talking about what we're doing by impacting 1 million families by the 28th of March, 2021. And it begins with you. It begins with your education. It begins with you taking advantage of all the information that we have available to us. This is where it begins. And tonight, I want to show you how this can apply to more than just here. It's about the rules. That's what this is about. It's all about the rules. The cash out is meant to help you collapse time frames. And that's exactly what we're doing. So what you see right now is you actually see the BYOB cash out loaded into the web analyzer. So when you actually are on this screen and when you are here, what you're actually able to see is the cash out. You get to select the cash out and select the rules. And this is what we've been training on and what we've been learning. And so I just want to share with you the rules again so I can show you and share with you how we can apply this to something else. So BYOB cash out is very, very simple. It's 3 rules that you have to follow. So these are the Hikinashi candles. Understand these are the Hikinashi candles, which means they focus on the trend. They're going to help you focus on the trend of the market. And when you're focusing on the trend, you're going to see that if it has a flat bottom on these candles, as they begin, a flat bottom on the candles mean that you have a strong uptrend. So that's what this means with the Hikinashi candles. A flat top on these candles mean that I have a strong downtrend. And so you can actually see what that is right here. Now, the PSAR with these dots are the PSAR. That is the parabolic stop and reverse. This is what that is. Now, understand this simply means that they act as a support and a resistance. So it's like a trail stop, it's support and resistance where it moves with the market. The market is gonna move in between support and resistance. And that's why this PSAR is so important, because it kind of creates that support and resistance lines around the candles. So to combine together, you know that you have a strong uptrend or a strong downtrend. Now, by adding the stochastic, it's going to help me know the momentum of the market. What direction is this market moving? So when the stochastic is in a downtrend, the blue crosses over the red, and it comes into a downtrend, that means that I'm in a downtrend. You see it crosses and it goes down. So around 80 on here, that means the market is oversold. So you know the buyers are going to get to the market. Now, when it's down 20 and below, around that time frame, around that area, that means the blue crosses over the red and it moves into an uptrend. Now I know that my market is actually oversold So the buyers are actually going to get into the market. So this is where we are. This is the BYOB cash out. Now, we've been doing this on a 15-minute chart on the web analyzer. Yes, you can take this and you can apply it to the other time frames. But with the 15-minute chart, you're going to get 10 pips. You're capturing 10 pips. So here we have the harmonic scanner, and I want to make sure all my settings are back. Okay, this is the harmonic scanner. And how can I take this and apply this to something else? How can I take the BYOB cash out and apply it? It's 3 simple rules, same thing. And what we're doing tonight is to show you that, look, I can apply it to different things. I can take this cash out and apply it to different tools. That's exactly what I can do, because it's all about winning. And I want to make sure that we're understanding. I want to show you some examples. And Thursday, we want to try to trade together. That's what we want to do. We want to get into that where we're actually trading together. So if I take this, and now remember the harmonic scanner, I can open this scanner. This is it has to be like one of the first tools that IML had when they developed as this company grew. So you can take this, open this up, and understand that I'm given an entry point. I'm given a take profit 1, 2, and 3. And how do I know what take profit to do? This is actually a 15-minute chart, but you want to look at higher time frames and look at the market. So, but I can literally take this, and as long as I don't use this stop and move it up, I'm at about an 80%. I'm at an 80% accuracy by not doing any analyzation. So we've covered that. So 80% accuracy by just taking the trades. And I want to reemphasize why you don't want to use their stop loss. Just like with the PSAR, which we were just talking about, right? The market moves in between support and resistance lines. So if you just look at what we have on here, you just look, you see these little choke points where it looks like the market stops. It's like it bumps into a wall or something. And if I come over, you see the exact same thing. No matter how far over I go, no matter how far to the left that I go, you're going to continue to see that in the same spot of the market. It's always going to be in that same spot. So no matter what, like if I have this line here, what happens? It looks like the market is continuously hitting that choke point, that wall. And that's what a support and resistance line is. And that's why we tell you that the market repeats itself and the market continues to do the same thing. So these lines are these take profits, and my entry are typically at those points. They're at those stop and at those support and resistance. So when I put my stop loss, I want to make sure that my stop loss is not on a support and resistance line, because if it's going to bump onto that line, I don't want it to knock me out of the trade. But how can I take my BYOB cash out and increase my accuracy? How can I do that? Well, we're going to do it right now. So what I want to do across the top, you actually have where you can make changes on this chart. And it will stay for a couple charts, but understand that you probably have to go in and continue to change it. So I want to change my candles to my Hikinashi candles. And so I've changed my candles to my Hikinashi candles. And I want to look at my indicators. So if you look, it does not say indicators unless I hover over it. But it looks kind of like a chart with a little arrow kind of thing on top of it. This is where my indicators are. So you want to hover on top of it. Now I have to add my PSAR. You want to add that. And I also want to add my stochastic, right? So now I have my stochastic and I have my PSAR and I have my Hikinashi candles. Voila, look what I have. So I want to get rid of my RSI because I don't need it. Now, it looks exactly the same. We're doing the exact same thing. I have Except for being green, they're blue, but that's programmed into this software. Remember, it's been around for a while. So we know red is still the same. So if it should be no confusion. Red candles and the ones that move up on here are actually just blue. But we know that we're using harmonic patterns. Harmonic patterns actually scan the market and they look for certain patterns using math and, you know, just things that we don't have to sit there and calculate. Remember, the beauty behind these tools is that they're actually doing the heavy lifting for us. So these are things that we personally do not have to do. That's the beauty behind it. So we know that we've got our harmonic patterns. We know we're already at 80% accuracy. So even if I took this trade blindly, I'm at an 80% accuracy rate. So now I'm gonna just go in and I'm gonna pull a few trades. And on here, it doesn't even matter the time frame. But if I just pull some trades, I actually want to pull something that's already went first. So I just want to pull some trade. So in doing this, what I have right here is what are my rules? My rules are that if my buy candles are continually moving up and they have a flat bottom, then that's a strong buy. Now, my PSAR has flipped to the bottom. That also indicates a strong buy. Now, my stochastic, this is what I want to emphasize. Now, the reason why when we were here on the web analyzer, the reason why this stochastic, I'm staying within these rules. I'm still staying within these rules. I'm not deviating, but I want to explain something. The reason why we want to be around this 80 and this 20 line is because it shows the momentum. It shows the momentum of the market. See, we don't know. You can be here in a trade around here, somewhere in the middle. And if I start taking this trade with my stochastic somewhere in the middle, what happens is I don't know without doing further analyzation of the market where and what this is actually going to do and what's going to happen. I don't know because I haven't done any other analyzation. So if I started taking a trade, for example, if I would have started, we would have thought, now I'm not looking right here, but let's just say the stochastic was moving up and we would have actually entered a buy. Let's say everything else lined up, but my stochastic is in the middle. You see this turn around and it goes back down. So we don't know exactly what it's going to do. Because if I look, well, it had already changed back right there. But what you can see is, you know, like even this one was going down, but then the PSAR flipped back and then it came back. So you really don't know what the market's going to do. And sometimes it's like a 50-50 chance. You know, sometimes it's going to work out in your favor, like this one did, and then sometimes it does not. And so that's why it's so important that you're using the 80 and the 20 on here. When I come to the harmonic scanner, I keep emphasizing, and I've said it before, further analysis. You know, unless you're doing further analysis, you're not going to know the momentum and what the market's doing. Well, guess what? We have further analysis on this chart. We have further analysis in the harmonic scanner because they've done the analysis. They've scanned the market. They have the harmonic patterns. They've done all of that for me. Now, don't get me wrong. I don't want to start halfway, but in this 80 and 20 is still important to give you a higher accuracy and a higher percentage. But with me adding the BYOB cash out onto the harmonic scanner, look at it. I have already got my entry, my take profit 2 and 3. So we already know what the market's doing. We already have it scanning the market for the harmonic patterns that indicate where the market is actually going. So when I began to just add this for confirmation, because what we're doing on here is we're adding confirmation to trade on a harmonic scanner. So I literally have my candles in an up position in a buy. They're going up in a buy. My PSAR has flipped, and my harmonic, my stochastic on the harmonic scanner, you see it's up a little bit, but remember, we still want to be around it, but it does not have to be as precise as on the web analyzer. So, but we're still around that 20. See, we're not starting up here. So we're still following the rules. Understand these rules are still in place. But if you look, everything is already lining up. And once it lines up, I can enter the trade. And as long as it's still in motion, it also helps indicate what take profit you take. So we're still in motion, and it actually reached the top. So it actually reached take profit 2 before it gave you any indication that it was going to turn around or do anything else. So it's up to you at this point. Do you want to stay in a trade? Do I want to keep going? Because obviously I'm still not around my stop loss, but do I want to risk going all the way for take profit 3, or do I want to stop at take profit 2? So even if we would have done that from where we would have entered it, because we would have entered when the candles lined up, you know, I'm about at my 10 pips. I'm still getting my 10 pips on this one. And remember, it's the currency pair. It's the currency pair that's gonna tell you, you know, how many, you know, like how many you're actually getting, and you know, as far as the pips, because some are actually gonna be more. And remember, this is what we're on right now is the 15-minute chart. So even if we would have went to take profit 3, that was 17. So before we start looking at any other trades on here or anything else, do we have any questions as to what I've gone over or shared so far? Questions or comments? No questions, no comments? Okay. So let's just look on the hour chart. So this is one that is actually looking for a buy. And you see how on here, these indicators stay for a couple charts. So you won't have to change it every single one, but understand you want to make sure you're still on the same thing, because it's not necessarily going to stay for every single trade. But as you can see, we just changed the currency pair, and we still have the Hikinashi candles, we still have the PSAR, we still have all of this. So we're looking for a buy. But what I want to point out is, yes, my stochastic was flipped. Yes, my candle, but my PSAR was not. My PSAR had not flipped to the bottom. So I still am in a downtrend according to the PSAR. So as you can see, the red candles began to come back on this currency pair. So this one is just not ready yet. It's just not ready yet. So I mean, now what you have on this one, on the harmonic scanner, is the fact that understand that this is just Forex. So this is one of the first tools that the company's had, and they've had great success with it. So once again, it's just Forex, and these trades are actually being scanned. The market's being scanned, and it's being called by the brokers. So this is why we have different brokers on this side. And like I said, this is just a Forex. But you got about, I said about an 80% accuracy from what I've seen and what I know, and it's gonna give you those entry points. But when I'm on a web analyzer, you understand that I'm trading more than Forex. I'm trading Forex, I'm trading crypto, I'm trading indices, and I'm trading metals. So, and you have the different time frames. So what I'm doing is just highlighting to you that, you know, on here, I have to know my 10 pips. I got to calculate it. You know, you have to do it. So that's all good and dandy, because once you begin perfecting your skill set, you can actually begin to increase your time frames. You know, you can do more. I can catch more pips. There's so much more that I can do. However, when I'm on a harmonic scanner, it's actually giving me those take profits. It's letting me know, because it's basing these take profits off of the harmonic patterns that the market has given. And so what we're doing on here is confirming. We're confirming these trades that they've actually called. So here they give you a potential sell, potential buys. So this is actually scanning a market looking for so many different currency pairs. That's what's happening on the web analyzer. But on the harmonic scanner is, you know, you actually get to go in and I want to look at this. What is it that you actually want to look at? And that's what happens with this tool. Let me see. Any questions so far? I want to make sure.
Just to add to that, so for all our business partners tonight, yes, one of the unique things about the BYOB Cashout strategy is the rules are laid out for you to take advantage of any of the tools that we have. So instantly, once you identify and understand those 3 simple rules, it puts you in an instant position of profitability. So there's nothing that's stopping you from being effective financially, because you know everything is laid out for you. And as you begin to become diversified in, you know, the different markets that you want to take advantage of, that's the understanding of both of these tools. And it's just very, very important to understand that ultimately you literally, after diving into your IML Academy, going through your basics, technical analysis, to become familiar with the vernacular and the understanding, and then taking advantage of your demo account, and then you have the ability to go live. So these tools are designed to put you in a position of profit, you know, as quickly as you decide that you want to engage in that market. But these strategies, once again, are uniquely designed to put you in an instant position of profit as you're still learning, and then having the ability to go from the harmonic scanner to the web analyzer and have the opportunity to tap into the entire scope of the marketplace. Because what we're demonstrating here with you right now is the BYOB Cashout strategy. It's a universal strategy that is applicable to any tool as well as any market. So once again, I want to add that to the commentary so you'll understand the validity on any day of the week, any moment, any hour, any second, that you can extend your PIP count to as much as you desire, and you can literally take as much income revenue from the market every single moment, every single day, if you simply stick to the rules and understand how these tools work.
Thank you so much, Mr. Rogers. And I mean, he's absolutely correct. So, and that is exactly what this is for. And I mean, we're talking about educating 1 million families. And that, like I said, that begins with you. And it begins with you having already accepted the challenge to learn how to be your own bank. You're already doing it. You're already enrolled. You are putting yourself in a position of profit. You're learning the tools. So as you're doing that, I mean, this confirms it. And this trade that we just pulled up while he was speaking, this is a perfect example of why. Because yes, this does have 80%. Yes, it does have an 80% accuracy or even higher on this tool. But I'm going to switch back to the traditional candles just to show you. So I'm on the traditional candles, and you would not have entered this trade. So you would be sitting here waiting to enter, or you might have entered based on, you know, you might have entered on a red candle because it looked like it's coming down into a sell, or whatever you might have been looking at to go ahead and enter this trade, because it's giving you your entries, it's giving you your take profit. So this is perfect. So when I actually switch back to the Hikinashi candles, what you can see is that this is a strong uptrend. It's still in a strong uptrend. So if you would have actually entered this trade just coming off of the D, right, when this harmonic pattern ended, if you would have just entered the trade, and what definitely would have happened is you would have hit your stop loss. I mean, if you would have hit the stop loss, because you got to look, we're already over that first entry point. We're already past that. So if I would have just entered on a market execution, I would have just entered this trade in a sell, I would have hit my stop loss even if I moved it up above. So this is why this extra confirmation is so important to increase your accuracy. So I'm looking at the fact that I still have a strong uptrend. I'm looking at the fact that, according to the candles, I'm looking at the fact that my PSAR is still showing me in a strong uptrend. But what else could have told me that? See, my stochastic is at the top. It's showing that I'm in an over, it shows that I'm closer to the top. So I'm definitely overbought. I'm in an overbought position. But so I know that the market is going to turn and it's going to come for a sell. But we want to confirm, we know it's coming down. We know, I mean, this is the hour chart. So it's going to come. And if what kind of pattern is? I mean, it's gonna come back around, because if you're learning market structure and everything else, it looks like I got a upside down head and shoulders. So it's just, you can see what the market is doing, but at the same time, it has already scanned. It's got these harmonic patterns. So I know the market's gonna turn soon, but when does it turn? And that's what this is for. So you can either put it on your wait and watch list, or you could just continue to look for other trades that confirm and you can enter. And this is why, even though you can just jump into these trades, this is why you want to confirm them. This is why. Let's pull up some more. If you got a question, ask. Can I pull the same one? Hold on. Just randomly grab some. Okay, so this is one that we are waiting on, but I see my stochastic is only one of the rules, but where it was around the D, it was around going, looked like it was flipping up, but my candles, even when it got to the point where I had a flat bottom on a buy, all three of the rules did not line up. And what happened? The trade has actually begun to turn around and it's still going into a sell position. So we know that I'm not ready to enter this trade, because you might have entered this trade here, even if you would have done a buy limit, right, off of this D. I would have passed this and turned around and entered the trade, but as you can see, it's going back into a sell right now. So this is just added confirmation and added, because there's no way I would have placed a buy limit or anything, which, if you recall, a buy limit means that I have an expectancy that the trade is going to turn around. It's going in a sell. This is a perfect example of that. The trade is in a sell, and you would have probably placed that buy limit here at the entry point, saying it's currently in a sell, but I wanted to pass this point, and then when it turns around, it goes into that buy. So if I turn the regular candles back on, you can actually see what happened. What happened is it was coming down into a sell. You see all the noise that the markets make. You see all the conversation, but what you see is I went to a sell, and obviously it came down and it popped below that line, and then it turned around and it moved back up into a buy position, which would have activated my trade. My trade would have been activated right here. This is a perfect example of what a buy limit would be. So this is part of what we've been studying when we're understanding how to enter the market. So had we done that without any further analysis, you see the trade would actually turn around, and we are still going into a sell, but my trade was activated. So you always want to do just a little extra added confirmation. So We don't know what the market's going to do. I mean, based on what it's called, it's going to turn around. We know it's going to turn around. However, when does it turn around? Does it turn around now, or does it turn around before I hit my stop loss? What is the market going to do? And what my indicators of my added confirmation show me is that the market is actually not turning at this moment. Got a sale candle. Let me change back to the Hikanashi. I've got a sale. I got my PSAR at the top, and my stochastic is still going in the down. It's turned back to go into a sell. Now, what do the wicks tell me? Wicks tell me that the market should be turning very soon. So I know it's gonna turn, but it's just when. And we don't want to enter the market before then. Questions, comments? That's the web analyzer. And you see the web analyzer is gonna cha-ching, it's gonna give you, it's gonna call the trades. But that's not what this is not gonna cha-ching. So you just have to click and randomly select them. I mean, this is just one that when it came off, according to the Hikanashi candles, this is when this trade actually got ready, but my PSAR flipped. So you're well into this. So this is part of adding extra confirmation. So I would not have taken the trade, but had you just blindly taken the trade, so you don't have to win every trade. You know, if you would have blindly taken the trade, this is one that shows you based off of the harmonic scanner that I could have entered the trade, and I could have entered the trade when I got to my entry point. I could have took profit 1, and then it actually hit take profit 2. So just, I don't want to lose it. So just looking at this, right? If I'd have just blindly took it, so it actually hit now when I got my sell. If I'd have took this one, that's 18 pips. But remember, you don't have to take every trade. You don't have to take every single one. So just doing this alone, this trade, I like confirmation. So it's, what do you like? Do you want to take it based off the information given to you, or adding those extra confirmations? And adding the BYOB cash out to those extra confirmations is just one I would have sat out. Now we looked at this one. Questions or comments? Because it looked like we're getting into some trading. Because the instructional part of this is very simple. Because you actually got the harmonic scanner working for you. You got the harmonic scanner doing the heavy lifting. And then we just come in with some very simple confirmation. Very simple and easy confirmation. I want to show you what I saw earlier. So here, same thing we do on the other one. So this is where we look, the harmonics is scan the market. Scan the market, gave me harmonic patterns. It called for a buy. Call for a buy. So this alone, when this trade, I got my Hikanashi candles, flat bottom. PSAR came. Now we know that this begun, the stochastic begun around the 20, but remember, why do we only enter around the 20 on the web analyzer or enter around the 80 on the web analyzer? Is because we have not done any other analysis to understand the direction and what the market's doing, and it only gives us a 50-50 chance. But if I'm looking at these candles right here, and I'm looking at this, the harmonic scanner is doing an analysis on its own. So I can add the analysis that the harmonic scanner is doing, and I can add what I'm doing with my BYOB cash out, and I can actually enter this trade a little bit above, because I don't have to be exactly at the 20 or exactly at the 80. You still don't want to be that far out from it, but I know that my harmonic scanner has done that heavy lifting of the analysis for me. So if I would have entered this when these candles got ready, this was 28 pips, right? I took 28 pips to take profit 1. Then I noticed that I'm at the top of my stochastic and I still haven't hit my take profit 2 or 3, but I'm at the top of my stochastic. I know that the candles are turning. So guess what? I'm on an hour chart. So of course this is a couple hours later, but when I know that this is turning, that means that it's time for me to get out of a trade, because look at my stochastic, it's at the top and this is also at the top. But guess what? What do I know about the rules? I know that when all 3 rules line up, I can take a trade. So I could have turned around, I could have just took this trade, and you talk about another 15 pips on this retracement, on this pullback, on this correction, right? Because that's what this is. That's a correction. We know that the market, we know that the market is always going to correct itself. So what you're seeing, because we're on the hour chart, is the correction. So you can stay in a trade. So the market and we're definitely going to do an in-depth training on correction and flags and different things. But this is right here. What am I seeing? I'm seeing movement in the market. I'm seeing this buy and this uptrend, and which you can call it impulse. And then I'm seeing this correction. And then I see it's continuing, and then it does it again. It corrects itself, and then it continues. So when you start getting into the higher time frames, you're gonna see the market drawing flags. You're gonna see the market correcting itself and then continuing on. So based on knowing what I know of market structure, I know that this was a correction. But just based on the rules alone, I know that when these wicks begin to form, you don't stay in a trade. It's at the top of my stochastic. The wicks begin to form, because remember, you don't see any of this right here. You don't know what is going on. So you can stop that take profit 1. I can look at my rules, get my pips on this correction, look at my rules again, and begin trading again and go on to the next take profit. So you can analyze this by just setting your take profit, or you can actually ride this out and take these trades based on what you know of the rules. So you could have scalped this, which is get you some pips, with intraday, which is like 10, 30, 20, 30 pips. I can do that. I can set it for a long-term trade. And if I did that, right, if I trusted it for a long-term trade, if I go to take profit 3, that's 105. So remember what I was saying for the longer trades. We can take those longer trades. This is helping us take them because it's already done the heavy lifting for me. But I can set it and walk away from it for longer term trades based on what I know of the Harmonic scanner in itself. Help use the BYOB cash out for my entry point, or as I'm learning these rules and I'm understanding, I can trade it to take profit. I can look at that, because guess where the market began to turn and it got stuck. It got stuck around that take profit 1, because these are support and resistance lines. These are choke points for the market. Turn around, the correction, and it comes back to another one. It goes back up and it gets at this choke point again. But look what happens. It goes all the way to take profit 2. And so when it does that, you're looking at another 43 pips to that point. But let me just stop at take profit 2. That's 33. If I were to stop right there and take profit 2. So it's just multiple ways that you can actually trade this. Do I have any questions? Because I want to make sure everybody's understanding what I'm saying. Questions or comments?
Tasha?
Yes.
Ms. Dyer. The question I have is, it's so simplistic, but I'm going to ask the question anyway. Okay, back to the basics, the buy, sell. When you determine that that there's a point that you you're interested in. Is that the buy or the sell part? Or you come out, or you buy first and you sell you then buy? That's why I get confused on.
I just lost connection on here. Can you hear me?
Can you hear me?
I know I can hear you. It's connection loss. So, okay. So what you're looking for, a buy or a sell, is simply based on what's being called. If I'm buying a market, for example, this gives me my entry point. My take profit is above it. So I'm looking for a buy. If I'm on another currency pair, I'm gonna just come back over here for a second. If I'm around the 20, I'm looking at I got green candles. Y'all, we just missed the trade, but I got green candles. So I know that green means buy, red means sell. If they're flat on the bottom, that's a strong uptrend for a buy because these are green candles. So if their candles are red and they're flat on the top going into a sell, the reds are sells. So these will be strong sells. With the dot, the PSAR that flipped to the bottom, all of this is indication of a buy. So you're entering the market. You're actually entering the market for what the direction of the rules and what it's called for. So if my stochastic is around the 20, I know I'm going up. And if I'm going up, then I'm looking for a buy. If I'm going up here, I know I'm looking for a buy. So everything is an indication of a buy. So if you remember that the green candles mean buy and the red candles mean sell. So even this is saying potential sell, but if I click here, for example, and what it's showing me is that it's saying potential sell, but it's scanning the market. It's just scanning the market for that entry point. It's scanning the market for movement to show me that of a potential trade. But I want to use my human analysis. I don't just want to take a sell, because what do I see right here? I see that my candles are turning green. They were red, but they're actually turning green. So when they turn green, I'm looking for green candles mean buy. My stochastic is around the 20. Around this 20 mark means that I need to be going up, and that means buy. So what I'm waiting for is all three of my rules to align. My stochastic is already doing what it's supposed to do, but I need a flat bottom on this candle, and I need this PSAR to flip to the bottom, and that in itself means then I'd be ready for that buy. So the market, what's happening on the chart, actually, to answer your question, what's happening on the chart is actually that is how you determine a buy or a sell, is the actual chart. What's happening on the chart. So like,
okay, I got it. Thank you.
Mm-hmm. Any more questions or comments? And then and the reason I pointed this out as far as, something other than just taking this and riding it all the way up, and how you can do it, is because the web analyzer called this exact same trade. So all you're doing is looking at the exact same market, and you're looking at the same market, and you from just two different perspectives. The web analyzer is one, and this is one. So if I can, they actually called it again, because this is not what the time frame I'm talking about, but they called it earlier. The web analyzer called this trade earlier. And I was looking at it, and when I saw that, because I was actually looking at both of them when I was trading earlier, and the web analyzer had called a trade too. And so this is why this was actually a very good indication, because if you look, It's just same chart. It's the same chart. But look at this. This is why I know that I can actually, so when we talk about the web analyzer scans the market, it actually scans the market for entry points. It scans the market for what you're looking for as far as those entry points. And, what is this? This is on the 15-minute chart. So of course you're going to have more candles than what you see over here because this is an hour chart, but you actually have that's that correction. So we already know what's happening in this market. This is a very strong uptrend on this. It's a strong uptrend. But so what we're trading right here is that correction. That's what we're doing. We're trading this correction. Like I said, that's the 15-minute. This is the hour. That's the 15 minutes. So you're going to have more. So all of that's happening. This is the same chart. So we know we're looking in a little while. See, look, a red candle just began to form. So we know that we're looking for this to move up soon. Because guess what? I know I'm going for my take profit 3. I know that this is a correction by just looking at this market. So as you begin to understand the market and you looking at these tools, I went into more detail just because I want you to understand how accurate this is. But if you are a guest or if you are in that very beginning of your learning phases, then understand the harmonic scanner. It calls the trades for you. It's going to call them. I got an entry point, take profit 2, and take profit 3. Understand that my stop loss, I'm going to keep saying this. I just showed you how these are support and resistance lines. I do not want my stop loss on one of those lines, and that's what they're calling it on. So my stop loss is always going to be a little bit below it, always, because these are support and resistance lines. So you just give it some cushion. However, I can just blindly take the trade because I'm still learning and know that 80% accuracy rate. 80% accuracy rate, guess what? That's still great because before you accepted the challenge, you had an 8% return on average, an 8% return on your retirement account. And that's before you even knew that you could become your own bank. And you are happy with that. You're paying into it monthly. You're excited, to think that one day this is going to fund your retirement at 8%. So just to know that I have an 80% and I can just take some trades at an 80% is phenomenal. Just take the trade. But to increase that, now we add the extra analysis. So step 1 of the analysis is aligning the rules of the BYOB Cashout, which is the candles. If they're flat on the bottom, then on the buy candles, guess what? I have a strong buy. Excuse me. If they're flat on the top, I have a strong sell. Now, to add to that, I'm looking for the PSAR, parabolic stop and reverse, support and resistance. That's what it's measuring. So, I want to make sure that my PSAR for a buy is on the bottom. Then I look at my stochastic. It lines up too. And guess what? I can now take this trade. And I can just take it all the way to take profit 1, take profit 2, take profit 3, based on what you want to do, based on you wanting to sit through here and watch the market. So from my entry to take profit 1, 43, take profit 2, 70. So I'm really at about 70 pips based on where you actually entered. And then take profit 3, that's 113 pips based on where you entered. And so, of course, I just showed you some on the hour that was 20-some pips. But on this currency pair, you talk about 113 pips possible. So this is an opportunity for you to do some longer term trading as well, with you being given your take profit. So that's what this is. And then, of course, the more advanced you are, and as you begin learning, you can begin to recognize the structure of the market movement, to know that this is a correction in the market. When it pulls back, this is a correction. And when I see a correction, I know that it's going to continue. Correction, continue. So you can actually trade all of that when you know what you're doing and when you're beginning to understand the market. You can actually trade those. You can use these as entry points. So if I miss this entry point, I know I got a correction. I can use this as another entry point. Because guess what? All my rules line up as well. Flat bottom, stochastic, PSAR, continuing to trade. Questions, comments? Because I know this was a lot of information, but it's easy. 3 simple steps. Candles flat on the top or the bottom, PSAR flipped on the bottom or the top, and my stochastic crossed over in the upward position, my stochastic flipped over in the downward position. 3 simple rules, and they apply to any one of the tools. And we're actually going to be trading this on Thursday. We're going to trade. We need to get in the market together and take some trades. So we're going to be looking at the web analyzer. We're going to be looking at the harmonic scanner. And it works on the pivots. So, but this is definitely the harmonic scanner, and where you can capture quite a few pips. Questions, comments? No questions, no comments. So everybody is ready to begin scanning the harmonic scanner.
I'm not going to say that. Ms. Dyer, a question for you.
Yes.
In looking at the market, how long do you let the curves go up and down before you begin to choose where your, I guess would be your buy sell? How do you, when do you know that you should get into the market? I mean, is there a particular thing when you look at your pips in terms of whether they're short or long?
I am entering the market as soon as my 3 rules give me the confirmation to enter the market. So just on this tool alone, I can enter the market based without doing any analysis. I can enter the market at this entry point and set this is my take profit, period. I have not done any analysis. They gave me the entry and my take profit. So that's what I'm doing. That's how I'm entering the market. However, when I look at the candles, we changed them to the Hikinashi candle, and we added the PSAR, and we changed it to the stochastic. So by using these 3 rules, only these 3 rules, I can just randomly grab some currency pairs. You know, let me grab one that's further down that would have already been taken. So just by using these 3 rules, right? Just by using these 3 rules, as I see when it come off the D, that's when you're looking. So all these happen. So remember, I'm on an hour chart. So yeah, I got a flat bottom candle right here, but none of my other rules line up. I'm also haven't even made it to my entry point yet at all. So I'm literally waiting for it to hit. But guess what? I got a candle, a buy candle with a flat bottom. I got a PSAR, stochastic. My PSAR flipped to the bottom. So here's 1 rule, 2 rules. And then my stochastic is already around this time frame too, around the 20. Remember, it's on this one, it's not as exact and precise. It don't have to be dead on the 20 like it does on the web analyzer, because the harmonic scanner is giving me that extra analysis that's needed to take this trade. But it's still down around the 20. So it's still down here. So when everything lines up, I take the trade and I go to my take profit. So in doing this on this currency pair, because I actually could enter this one before. So just by doing this and going to take profit 1, that was 75 pips on here. So my entry point is when the rules line up. That's it. When the rules line up. So if I didn't do any analysis on this currency, no analysis at all, from the entry point to the take profit was 47 pips. So that's how I know when to enter the trade, is when the rules line up. Everything is about everything for a good trade, buy, sell, or buy or sell is all about your entry point. You enter the market when the rules line up. That's it. That's when you enter the market, is when the rules line up. And as you see with these rules, I didn't have to wait till my entry point right here. I actually was able to enter further down, and I actually got 75 pips. I'm about 75 pips just based on that alone. Once the rules line up, I'm in the trade. Rules don't line up, I'm not in the trade.
Thank you.
So we got time. Okay, I got a comment. It says great info from Stacy. So thank you so much, Stacy. Any questions, comments as we begin to transition and close out this call?
Yeah, I just want to add to that. I want to make sure everybody really understands, as Ms. Dyer so eloquently spoken, the benefit of the harmonic scanner. For those of you who are just beginning to really get a grasp around this, without any analysis, just like she stated, you look to the right, it's going to give you an entry point. It's going to give you a take profit, 1, 2, or 3, and it's going to also give you a stop loss. That's without you doing any analysis. To enhance that trading experience and become even more accurate, the BYOB Cashout strategy simply gives you additional confirmations to ensure that that 80% accuracy rate increases upwards to 92%. And if you follow steps 1, 2, and 3, then you are going to walk away with profit. That's what all the tools are designed to do. And the difference between the harmonic scanner as well as the web analyzer is the harmonic scanner actually shows you the entry point. It teaches you how to do that. Once again, you follow the rules, you become profitable. Execute with the tools, you become profitable. So you never have to be consumed or concerned about where to enter. The chart is going to give you all the directions. So what we want to do is become even more accurate with understanding what the charts are telling us. So when we understand what the charts are telling us, then our way of extracting revenue from the market becomes much more favorable experience for you. And all of that's going to continue by you staying plugged in and making sure that you spend that hour, 50 minutes, whatever the case may be, inside the academy so that your eyes can become more attuned and more astute to what you're looking at. And I can assure you, as long as we've been doing this now, if you stay committed to the academy, your eyesight will become even more clear and you'll begin to identify patterns and outcomes based on you continually being committed and staying plugged into the information. So I just want to reiterate that and help you understand that once again, these tools do all the heavy lifting. So we're just being more communicative about how to extract the information, which leads you to that strong, high probability of perfecting your pip count on a day-to-day basis. I see we have a hand. Go ahead and ask your question.
This is Sharon. For the take profit 1, take profit 2, take profit 3, when you're entering into the MetaTrader 4, do you enter separately? Do you make separate entries for each of those take profits?
Yes, you would enter a separate trade if you decide to do some twin trading. So yes, you would definitely enter in separate trades to capture whatever that take profit margin will be. That is correct.
Thank you.
Just to add to that though, with the take profit 1, 2, or 3, if you notice that you're going further into those, though you're going across more support and resistance lines. So just as a caveat, and this, like I said, once again, this is training tools, and this is Tasha. I never took take profit 3 till I understood market structure, because remember, these are support and resistance lines. And as I stated earlier, this is a choke point. That's really, I call them choke points. That's what a support and resistance line is. It's, you know, if you look to the left, every time you see, like you see right here, you see the market hesitates when it gets there. Go to the left, the market hesitates when it gets there. So as you're learning the market, you know, and you're learning how to read it, you know, take profit 1, even if you want to go to take profit 2. But I would definitely recommend learning more market structure and understanding how to read the market before I start going to take profit 3. Because do you know if the market is going to go past those choke points? Do you know how to read it? You know, what is it that you're understanding? So yes, they're giving you take profit 1, they're giving you take profit 2, and they're giving you take profit 3. That's not for you to take each and every last one of the profits, right? It's giving you recommended take profit points, because this is the first support and resistance line that you come to. This is the second one, and this is that third one. So that means that the market has to push through each one of these support and resistance lines before it gets to that take profit 3. So just to clarify, it's not saying you want to take each and every, you want 3 different, you know, I need a take profit 1, I need a take profit 2, and a take profit 3. That's saying this will be your first take profit based on what you see. Then I can go a little bit further if I want to get more pips, or I can go to take profit 3 based on the market. So it's definitely not for you to always set 3 different trades. It's for you to understand. You look at it as a choke point. It's a choke point. So that's what this is. Those are those support and resistance lines. So is this trade gonna push through to actually get all the way to take profit 3? So if you haven't learned to read the market structure and to understand market structure, I don't recommend pushing it all the way to take profit 3, because it does not always hit take profit 3 right away. And you know, I don't want it pulling back on you, or you trying to jump out of a trade and not understanding and all of that. So a good start point when you're learning is take profit 1. And then as you keep going, now I want to go to take profit 2, because I'm understanding. I'm beginning to see some things. Because just like right here, what did this one do? It pulled back. The market corrected itself. Then it kept going, but then the market corrected itself again. So if that makes sense. So, but what I see right now, it is now 10 p.m. and it is time to transition this call. So like I said,